scared to say I'm in a cult. I joined a cult. Anybody want to join a cult? No, I joined a cult. Oh yeah, I'm in a cult. I lift weights. I'm in a cult. Yeah, you see that? Oh yeah. Yeah, look at my haircut. Oh yeah. Yeah, parking. Who pays for parking? I buy options in real estate. You need a loan? Yeah, lending tips. Yeah, at lending tips. Just the tips. Okay, yeah, let me use my iPhone. Okay. Yeah, you see, scan it. It's just like Robinhood. Is there Robinhood on this phone? Or do they take Robinhood credits? That's weird. It's so much easier to buy options. Alright, man. Hit me up if you guys need a loan. See you guys later. Bye.
All right, ladies and gentlemen, I hope you're having a wonderful weekend. Today, we're going to talk about the housing market forecast for 2020. So it's your Friday. We had a great week stock trading. If you guys don't know, we are live Monday through Friday, 30 minutes before open. It's the first link in the description. So all your realtors, real estate agents, real estate investors, come over to the stock side. We do real estate as well, too. So get the best of both worlds. But I want to talk about the 2020 forecast and where things are going and kind of some of my thoughts on it. I did this last year and I was pretty much correct. And I used this California Association of Realtors. They have a housing market forecast that they put out every year. I want to go over it. There's 109 slides and there's also, we're not going to go over all of them, but there's a lot of stuff that they bring up here that, I'm sure a lot of you guys, with the trading, stock market correction, trade war, recession, impeachment, no deal, Brexit, all of this stuff is related to stocks, but you're seeing it in real estate. So again, hopefully you guys trade in stocks are seeing how some of this stuff is going hand in hand. And if you are in real estate, well, you probably know more about stocks and some of the macroeconomic risks better than you think. But I'm going to talk about that. And then I have at the end, I was just with our boy Lending Tips. He runs our real estate squad. So I was just with him. We were talking. We went to go get lunch and I got his opinion because he was in there on the video and he was there on the video with me last year when I did this, and he holds a completely different view than I do. So I think it's a good time to see. And we pretty much talk, is now a good time to buy real estate? Or I really wanted, regardless of what's going to happen, the real question is, are you going to be buying more real estate in 2020? So I'll tell you right now, my answer is yes. But actually, just thumbs up the video. Make sure you guys are subscribed, all that. Let's just get into it. So here is the main breakdown. Again, I'll show you guys the slides a little bit so you could see. But what they went over and what they said is that low mortgage rates will support California's housing market in 2020, but economic uncertainty and affordability issues will mute sales growth, according to a housing and economic forecast released today by the CAR. So this is the first thing, and this is pretty much the same thing that they said last year, and this is what I agree with. And there's a big thing you guys need to know the difference of. There's economic uncertainty, and houses are hard to afford. The lending, again, we're still going to wait to see what happens with Dodd-Frank getting rolled back. And as I think money will also start getting freed up a little here in the near future. But the key they're talking about is sales growth. And that's the thing you need to realize, is that there's a difference between the amount of sales growing, but does this actually affect real estate price growth? And that's what I'm sure a lot of you guys are interested as investors. So moving on, it says CAR's 2020 California housing market forecast sees a small uptick in existing single-family home sales of 0.8% next year to reach 393 units, up from the projected 2019 sales figure of 390. The 2019 figure is 3.1% lower compared with the pace of 402 homes sold in 2008. So this is a big difference. Last year, and we brought this, last year the CAR was projecting the amount of sales to decrease, but they still expected a price increase. Here again, they're saying they're actually expecting it to increase a little bit. But again, it's still muted sales growth, because even from You'll see the numbers below. The amount of homes selling should be more than this technically, or we've seen that in the last few years. The California median home price is forecast to increase 2.5% to $607,000 in 2020, following a projected 4.71% increase from last year. So they're expecting real estate to increase about 4%. I think last year they were expecting, I want to say 3. So then here's another main point they're bringing up. With interest rates expected to remain near 3-year lows, buyers have more purchasing power than in years past, but they may be reluctant to get off the sidelines because of economic and market uncertainty, said CAR president Additionally, an affordability crunch will cut into demand in some regions, such as the Bay Area, where affordability is significantly below state and national levels. These factors together will subdue sales growth next year. This is the big difference, and this is the most important thing that I saw here, especially when you go through these slides and you kind of see what they're talking about. None of this was brought up last year. Now, in the same paragraph last year, when they gave their forecast and what they were expecting, they brought up a unique phenomenon, which I agreed in. And I said this to Lending Tips. Everybody was talking low inventory last year. They were talking increasing inventory, and people were talking about, even the CAR, they were saying the issue is going to be inventory rising, but the phenomenon of people just getting past their breaking point on their mortgage from the last decade in the downturn, they're not going to be really willing to sell. So although supply is emerging, it didn't necessarily equate to higher supply, did not equate to taking a less amount on your homes. That's why reasoning for sales not growing. This is completely different. So they're saying it's more perception issue. The two biggest things is that even though the rates are lower and that it's easier to get more purchasing power, people are going to have economic and market uncertainties. They did not bring this up at all. So this is actually very interesting to think about. Then the next thing that they're giving more of a thing to is affordability. Last year, again, it was supply. Now they're saying affordability. So even with all these factors, and then with things getting a little worse in the economy, its prices are still high. And again, they still went up from last year. So that's a big thing. But CAR's forecast projects growth in the U.S. gross domestic product of 1.6% in 2020 after a projected gain of 2.2% in 2019, with California's 2020 non-farm jobs growth, sound like the stock market, at 1%, down from a projected 1.5% in 2019. The state's unemployment rate will tick up to 4.5% in 2020 from 2019's 4.3%. So they're expecting more unemployment and less job creation. So again, that's what Lending Tips, when we had the talk, I think, I commend him for that. He brought that up, and this was a big thing, what he's been seeing from his, what he's been doing a lot with all the transactions he's working on. Then the average for the 30-year fixed interest will dip to 3.7 in 2020, down from 3.9, 4.5% in 2018, and will remain low by historical standards. So even the CAR is telling you guys, buy TLT, essentially. They think rates are going to keep going down. If long-term rates keep going down, TLT is going to go up, but that's interesting again, and this has to do with the affordability. California's housing market will be challenged by changing migration patterns as buyers search for more affordable housing markets, particularly by first-time buyers who are the hardest hit moving out of state, said CAR Senior Vice President and Chief Economist Leslie Appleton Young. With California's job and population growth rates tapering, the state's affordability crisis is having a negative impact on the state economically as we lose the workers we need most, such as service and construction workers and teachers. Again, another thing brought up, but this wasn't brought up as much now, and this has been that California exodus. So again, this is only related to the California market, so keep that in mind. But this is how you could start to, nationwide, where are there good jobs and where are there cheap properties? Those, again, there is going to be some, we talked rotation today on stream, there's going to be some places that are going to have more benefits than not. So you're seeing kind of the negative with California. Try to find the positive in somewhere else. In fact, according to CR's 2019 housing market study, nearly a third of those sellers who planned on repurchasing said they will buy their next home in another state outside of California, the highest level since 2005. Older generations were most likely to buy outside of California, as 37% of baby boomers and silent generation, what's that, planned on repurchasing in another state, but only 30% of millennials plan to do the same. Shout out to you guys holding it down. But that's pretty much it. And now here are the numbers, and you could see SFH resales. This is single family homes in the thousands. So this is that 390,000 they expected. You see here, they're expecting higher growth. You could see last year when I made this video, we were coming off of 402,000 sales right there. They expected 390,000, which was less, but now they're expecting growth. So you could even see that the percent change, it was going up. 15 was great, 16, 17. It came down, and the amount of sales dropped. And then now even last year, it dropped as well too. But then this is the key I've been trying to highlight, just because, and this is the whole issue with all of this, when especially saying, what's going to happen with the housing market, the key is you need both sales to slow down as well as price. But all the while, your median price is skyrocketing up. Even from 2015 till now, you could see it's almost up 50% just on the median. From where we're at here, they're expecting an increase in 2.5, and now this is the smallest percentage increase in the median. So now, even though they were expecting kind of a slowdown in sales numbers here, they were still expecting 4% growth. If you take a look here, based on what they are forecasting for 2020, California is expected to see the smallest percentage change in growth that it has in the last 5 years. So this is kind of more in line with my thesis and what I believe, but again, I still think there's going to be areas to look for. And then housing affordability index, it stayed roughly about the same. And again, this gets balanced out here by the rates. You could see 2015, look at now the growth relative to rates. You could see as the rates were low, you saw sales growth and you saw price increase. But then that's right when you started seeing the rates start to get a little higher here. That's when things got a little bit, your growth started to slow down or go negative. So 2019 had the same interest rate as 2015, but we saw less of that sales growth simply because of, I think, how the year started and coming in from everything else. But now we're expected to have 3.7. We're going to be pretty much right in between 2016 and 2017, which kind of makes sense. You could even see the percentage change in the amount of homes sold there. And this is where you started to get that decline or that weird, it was a weird 2016, 17 between real estate. So keep that in mind, but that's pretty much it. So I'm gonna cut to the video with me and lending tips, but at the end of the day, I think there's going to be a lot of opportunity here in 2020. But what I do think is what I've always thought when there is all of this negative stuff, I think that we will definitely see sales growth. I'm not, but I don't think that's going to reflect to price growth. And if price is actually going to drop, I think the worst thing that could happen here is that it's not price drop, but no price growth, which essentially is a loss. Imagine investing in a stock for a year. If you're living in it and it's not getting in dividends, you're not collecting a dividend, and the stock didn't move after a year, and you had gains elsewhere, then that's not a good trade. That's what could happen to real estate, and that's where my downside perspective is a drop in terms of the growth, where house prices stay the same or maybe go down 1 or 2%. But I'm not expecting a big sell-off. And you can kind of hear that in the talk I had with lending tips. But overall, I'm probably going to be purchasing some houses here in 2020. I'm going to be looking at different opportunities all over to maximize this. I think make the money on the buy. If you buy it cheap enough, you're good. Again, long-term in investing, focus on your tenants, the quality of the property. That's pretty much it. But hopefully you guys got to learn from this. And even then, let's actually go through this real quick. You could see what they're talking about. They're saying, what is everyone worried about? Are we due for a recession? There'll be a recession sometimes before 2035. We don't need any more recessions. Never give a number and a date in the same time frame. This was very, very different tone that they've taken since last year. They didn't talk about all this. And they're saying the most likely triggers for the next recession are trade policy, stock market correction, or geopolitical crisis. Housing demand will decrease, but a housing slowdown is not expected to cause the recession. And that is the thing you guys got to realize. That's why it's going to be different than 08. And that's why 01 real estate did good, because when housing is not the cause of the recession or the economic slowing down, it's usually resilient from all that. See, they're bringing up the 10th year of the economic growth, the yield curve inverted. Isn't that funny? So you guys are literally, man, you guys are in the middle of all this. So if you are paying attention with the stream, stocks, and everything else, people are asking, is it a good time to buy? 22% say yes, 46% say sell. So keep that in mind. But again, you guys know all this stuff, and you could stop the noise. Let's look at the data, baby. Amen. You guys could use this to your advantage, though, and you could take full advantage of all of this stuff. And you guys know more about this better than you think. So get ready to take advantage of everything on the stock market and in real estate. But again, it's all just the data. They go over this. You could see the amount of sales, and this is key. You can see August sales. This is from even 2005. Through 2007, 8, we've been getting all of these run-ups in real estate. The amount of homes is staying the same, but it has a different effect on price, so just keep that in mind. But I'll leave you guys with that. Here is lending tips and I. What did you say?
What are you filming?
We're going to film real estate lending tips. I wanted to get you. I think you do better when you don't have it planned. You see his face,
Don't
bro?
you think it's...
You see his face? He's like...
Don't you think it's weird that people like real estate more than stocks? No.
Yeah. Hey, listen, man. We like you lending tips. We talked about you a few times on stream. People have questions, but I want to give a 2020 update. You remember last time we did this? You don't remember that video?
That was a year ago, yeah.
Yeah. See, so we could pull up the proof. I asked you. You thought real estate was gonna crash. I told you.
I said it was gonna drop.
It didn't. It did pretty well.
Some areas did well.
Well, that's what I want to talk about here, because I wanted to go see, because before we made that video, I looked at the California Board of Realtors 2019 guidance and forecast. They've released the 2021. So I'm gonna go even after this. You guys, we'll talk a little bit, and then
so you already read it?
I
haven't read it yet.
Well, I read it, but there's, I don't have it as like documented, but there's one key point. This is what I'm even going to talk about with them, that last year, in real estate, the biggest issue that everybody was saying, and like I'm sure you could relate to this, was inventory. Remember, everybody was like, inventory's increasing, even though then the rates, you know, people were kind of in the middle there, but it was inventory. That was the biggest thing. So now in 2020, the most interesting thing I see that the California Board of Realtors actually said was financial market conditions. So they're more worried about just the financial conditions here, and then they said affordability in some areas. So, but it's the same prediction as last year. I'm sticking to mine. They think it's gonna.
What did you say last year?
I said it was gonna pretty much. It was barely going to grow. It was going to stay up. I said some places would drop, but I said it's not going to drop. It's just going to maintain, and then
which it did.
Well, yeah, it increased about, I think, median. So the amount, and this is what they said in the update. We'll go over this, you guys. You'll see the chart and a thing I'm talking about. But amount of single-family homes that sold went down, but the median price went up about 2 or 3%, and that's pretty much what they're expecting now for next year. They're saying that things are going to go down, sales amount's going to increase. So they're expecting more homes to be sold next year with the median price going up, but there's still a little, you know, it's just not growing as much. I think it's only going to be like 2% or something. So what do you think though? So now, and even compared to what happened last year.
So let's be hyper specific, San Diego. I think San Diego lost a step. Values didn't go up. I saw a lot of price reductions. I saw a lot of homes selling for way less than what they were looking for. So I'm going to say that people are going to be a lot more realistic this year, but I still think home prices are going to be coming off of those highs. I don't know if it's going to be a huge crash, but there will be some sort of correction in 2020, especially with the elections that are here and everything else that's going on in the world. So for you guys, I mean, at home, it's definitely going to be some sort of downturn in 2020. And when I say definitely, I say 100% chance.
100%?
100% chance. I see it in the water.
So what do you mean downturn though?
So there's going to be a slowdown in people who can purchase homes. So like you saw this year, less homes were sold year over year, right?
Yeah.
It's going to be the same exact thing. One of the biggest things was affordability. People can't afford a house in certain areas, and those certain areas have those jobs or jobs available. So one thing you're going to see is people who need to get these jobs are going to move maybe farther away. In San Diego, you'll move to Riverside County, and you'll commute an hour a day. So those areas like in Riverside County will be a little bit more secure than some of the major metropolitan areas. So I just think home prices are going to come down. Affordability is still going to be an issue. Interest rates are going to go up, just like they did last year, and I think that was a major cause of the slowdown. We have the election, and we have all the trade wars, which I don't fully understand. I try to watch some of your videos, but the trade war is something that is going to affect probably jobs, I'm guessing, at the end of the day, which will affect people purchasing homes. I saw a couple people already. For example, a home my client wants to rent, the wife, it's an ex-wife, she has to move out, break her lease early and go somewhere cheaper because her ex-husband lost his job. And it was in a pretty good area. So the ex-husband was paying child support and some separate maintenance for the wife to maintain her lifestyle. They're rich. This is in a high-end area. And so he lost his job. She has to move out. He can't pay anything anymore. So I don't know what he did for a living, but I'm starting to see a trend of more and more people.
Yeah, there's been, a lot of, especially even on the higher, that's what they've seen more. Yeah. Higher end people have been not making as much. Luxury consumer goods have gone down, but not really the base level, your milk and shit like that.
But I see that as all of a combination of things to come, right? It starts with the rich. I mean, the rich people lose their jobs first, or the high end people. And then it slowly trickles down just because the cheaper labor is cheaper. But that's my opinion. I could be wrong again.
You can't lose out that much financial investment. You can solve financial advisory, educational purpose only. But at the end of the day, so how is this different? Wait, do we have to go there? Should we go? We gotta go in there. Well, here, the next question we'll get back to. But how is it different than last year? That's what we need. Should I bring it in there?
No, that's weird.
Why not? He doesn't want to bring it inside. He's scared. He's scared to say, I'm in a cult. I joined a cult.
Anybody want to join the cult? Want to join the cult? Oh yeah, I'm in a cult. I lift weights. I'm in a cult. Yeah, you see that? Oh yeah. Yeah, look at my haircut. Oh yeah. Yeah, parking. Who pays for parking? I buy options in real estate. You need a loan? Yeah, lending tips. Yeah, at lending tips. Just the tips. Okay, yeah. Let me use my iPhone. Okay. Yeah, you see, scan it. It's just like Robinhood. Is there Robinhood on this phone, or do they take Robinhood credits? That's weird. It's so much easier to buy options. All right, man. Hit me up if you guys need a loan. See you guys later. Bye.
Okay, so the question was, though, with you saying that it's definitely going to crash here in 2020, how is this different from last year? You said the same thing last year, so this is where, you know, what really what's the difference, like, between, you know, why didn't it crash last year, but more so, what makes this year different from last year?
So, last year, I was all about affordability and interest rates. Those two factors still exist, and they're going to put lots of weight on what happens in the economy and the housing market. What's different is the election, the impeachment, interest rates are stabilized, which I think they had to put a crutch, they had to give a crutch to the interest rates to keep them leveled so people would still buy homes. So I think that's going to be another factor, because rates are going to go up just like they did last year, but it's not going to come down, because it is one of those things where if the election plays a factor in it, it could go the opposite direction, and I mean the whole thing could go upside down. But those are the three factors. So the election, the impeachment, and actual hardcore interest rates that could affect the downturn of the market in real estate specifically.
Okay, so but don't you think it would take time? Because my logic is I don't disagree with you on those, but I just think it's slow for the boat to crash, to actually create a full-on crash.
I agree with you, and that's why I think it's been happening for the last
yeah, it's happened for this, and that's why I thought it was interesting what the California finally said, that the markets are of a concern, but I wouldn't necessarily say crash, because again, the only time we ever saw a crash was 2008. The last time before that was the Great Depression. You know, even 2001, median prices, when the stock market crashed, median prices went up. That's something I try to, you know, it's funny, man, you're the real estate agent, the lending, bro, and you're all bearish. That's why I tell people they shouldn't be too scared to buy real estate. I guess, let me tell you this, are you going to buy any more properties in 2020?
So
how about that? That's a different way to look at it from an investment side.
So my mistake in 2019 was I didn't buy enough properties. It just depends on the goal.
So you still bought property in 2019 despite you thinking it was going to crash?
But I didn't hold on to those properties. I sold more properties than I bought.
Okay, so why though?
Because I had that fear of prices stabilizing or coming down, which would eliminate any amounts of equity I built up over the last 5-6 years. So I sold I sold more properties than I purchased last year, but I did purchase homes that were of value. So depending on your goal, my goal is to buy at least one that I can hold on long term. Some people might not have that goal. Some people want to buy 50 that they can hold on long term. If you're going to do that regardless of what you think the economy is going to do. At the end of the day, I had just a feeling that, hey, these prices are going to come down, especially in the areas that I purchased in, because they were not as lucrative. They're in areas that are not, I mean, they're not going to command good jobs. They're not, I just see the writing on the wall in those areas, and that's why I sold. But for you guys at home, if you're watching, if you're buying real estate and you're going to hold on to it long term, it doesn't matter. As long as the numbers make sense. It's got a cash flow. But it doesn't matter where the market's going to be.
I see. I agree. That's why I think 2020 is going to be, I don't know, it's just like the stock market. I think if real estate, we didn't see that as much. I know some people were scared, but there wasn't fire sales. There wasn't people selling out. Like if you go look at like
there are, it just wasn't advertised like 2008. I see it every single month. I see an uptick in foreclosures on the software that we have, but it's just not it's not to the news level yet. I don't think Fox or CBS or CNN they're not looking at that because they're so distracted with tariffs and impeachments and elections.
I just think it's just not as big. I think when we look at how big the markets have gotten with it and all that, it's just not
the markets are larger, right? So the percentages, so when you see a stock market a drop of 400 points. 6 years ago, that would be a lot, right?
Exactly.
Yeah.
Exactly.
So the scale of it in real estate is there's still a lot of foreclosures. It's just not as newsworthy, and so people aren't reporting on it, or it's not flashing news. No one cares because it's still not a hot topic. But I'm seeing an uptick more and more, and I know that it's going to have an effect on the back end of the real estate market. But if you're buying a home for yourself that you're going to live in, I would caution you to find something within your means, just in case there is that catastrophic event, that you call it the black swan or gray swan or yellow, whatever you call it. But it's some sort of swan that's gonna come in, and there's gonna be a slowdown. I'm not saying you're gonna lose your job, but you could be in a position where you have to switch jobs, or you have a baby or family or something happens. So be in a position where you can withstand any swan that comes your way. If it's a rental property, be in a position to handle any swan that comes your way that is going to affect your renters. So make sure
100%.
your renters, whoever you rent out to or whatever area you purchase in, it's working class citizens, white, blue collar, I think it is, like the properties in Indiana that we have.
Yeah.
Very good job market. Home prices don't really appreciate that much or depreciate as well, but people don't lose their jobs in Indiana, in North Carolina. Places
And the
like
people
that.
like rent it out to, they're just like, they're nice families.
They're wholesome people.
Like, yeah,
they save, and they're not driving around in G-Wagons. They're
Hey man,
they're
come
normal
on.
people, everyday people who have had their car for 15, 30 years, and they're able to, even if they lose their job, they're still going to pay their $1,000.
They have savings too. I think that's the thing with both renters, and then like you said, just don't go above your means, but also, so you're still going to purchase in 2020 then?
I'm going to purchase one long-term rental, probably in Texas. I'll purchase flips.
So nothing's going to change with that. I guess the thing that's changing is literally, because this is what's changed with me in my attitudes towards flips and everything, is just that I'm just widening the margin. So something that would have took a month or two, I'm now thinking 4 to 6 months. I'm not, the same stuff that's right at market. I don't really want to throw cash at that. So it's just like getting it, something I think staying within your means, treat it like it is. It's a buyer's market now. And that's it. But that's why I think you're seeing like a down. That's what I'm saying. I don't think you think a crash is coming. I think you're saying a downturn, but are just like a slowdown. Because like this is even with the stocks that everybody gets this confused. They say it's crashing, but it's like when you even see a company say we're not growing, we lost growth. That's year over year, but it's still up 10 times in the last decade. So I don't know. So I guess any adjustment to that? Or are you still saying
it's
crash?
Relative. It's all relative. I still think. I mean, we could define a crash as what? 10%, 15%.
I say 15%. That's
a crash.
That's like a correction, a crash. Yeah.
So I would say a correction.
I don't think we're going to see that for another 10, 20 years. I don't think we will.
15% off
in real estate. No,
oh, wow.
I don't think so. That's so I just don't. It just doesn't seem like, again, it's just too unique.
What's the calculation on that? So if there's an average home price of 400,000,
well, CAR said in California 600,000.
Is the average home price?
That's what the median price is.
600,000 times 15%. So that's 90,000. So that same $600,000 home would have to sell for 510. Yeah, I think you're right. It might not happen this year.
I guess
I think it'll happen next year.
I don't know, because I think that's the thing though. If it appreciates next year, now you're 17% from the mark. If it goes up even 2%, and then it's already gone up. You see what I'm saying? So 5, 10%, 15% from last year. That's where I'm thinking it's not like. I guess we've just only seen a crash. Even for you, like you're older, but the only time you've got to see a crash was the worst. You saw the worst.
Yeah.
You didn't see 01.
I was there.
But real estate didn't crash.
No, real estate got better.
Real estate got exactly.
That's what I'm saying. I saw it. I saw the tech bubble. That was that 01, the tech bubble. I saw that on the news, and I saw real estate go up. I was still there in real estate producing while that went up, but 08 was a whole different story.
08, you saw everybody lose their shit. Like,
I saw. That was ugly. Family members losing properties, family and friends getting divorces. They overextended themselves. The suicide rate went up. There's a whole.
That's why I don't think we're going to see that. Like, people are, when it comes to real estate, that's been my stance since last year. Coming into 2020, the assessment, I think it's just different than stocks completely. I think stocks still have risk, and that's one thing, but I don't know. I'm excited. I hope and we didn't see this last year. I'm hoping we see it more, but more opportunity. I kind of hope people get as fearful as you do with real estate so that they just sell it real cheap, but I mean, we'll have to see.
I don't think they'll be fearful. I think people it hits them and they don't know it. I think a lot of people are in a position where they need to sell their home and they're going to have to sell it for break even or at a loss.
See, that's what I was thinking. I think the only real risk I would say is that people who are like secure and don't see it coming, I think it's just going to be a weird assessment of their equity. I think if there's houses like I saw with when we were looking for cult buildings, it's like you could get a dope ass building built in the 80s. Like, I was surprised, an office building for $2 million, but it's going to need another $2 million in capital.
Yeah.
So I think a lot of people, if they're going to get hit with anything, especially even the rental properties, just going to be a shit property. And it's going to be like, now if the price drops 10%, but then you need 10% capital improvements, then now you're at your 20%. Now that could come on faster. And we even saw that, when I sold my other house there, that, we took a loss just by it not being in good condition. So I think that's what's changing, and that's what will be the biggest thing. But overall, I think it's going to be stable. So you guys got to see the video, and yeah, that's it. I got to go, so we got to wrap this up. Anything you want to say to the people, man?
No, nice seeing you guys. I miss you.
And then send him an email for whatever reason. No, rebuke him if he doesn't answer the email.
I got one of those. I got a rebuke email.
Good. I told him to rebuke you.
It scared me, man.
I said, there you
I haven't been rebuked in a while.
Amen. 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 Rebuke your brother. Tell him that.
I forgot the guy's name. He said, Josh Answers told me to email you and rebuke you. And I said, man, that's messed up.
She said, where's my course? Be like, yo, where's I thought there's an international course. Yo, lending tips. What about my loan? What about my house? You guys hit him up, man. This is what he out here doing real estate. You in your Tesla doing all this, man. Rebuke him. Get him, baby. Let's go. All right, man. Cope. I love y'all. Have a good weekend.